Welcome back to another episode of the Money Codes. My name is Joel, here to give you today's Money Code Fix. And on today's episode, I want to go over a Fintech credit building product called the Extra Debit Card. And the reason why I'm choosing to do this video right now is about 2 weeks ago, I released some content that was centered around the top 5 reasons why you should stop using your debit card on a day-to-day basis. And some of the reasons I gave were security issues, the fact that you're likely leaving a lot of money on the table by not taking advantage of things like sign-up bonuses, cashback rewards, points, and things of that nature. So after I essentially ranted on why I don't like debit cards, someone told me to check out this product, and I want to go ahead and do a deep dive as I normally do. And I want to go over the website. I want to go over the things that I like, some of the things that I don't like, and hopefully by the end of the video, maybe you'll have a couple of nuggets and you can decide whether or not this product is for you. So let's just jump right in. On the home page, you can see it says build your credit with a debit card. Extra is the first debit card that builds credit and earns rewards points just like a credit card. No credit checks, connects with your bank. So let's just scroll right down. I'm not going to read everything on the page. I just want to give you some high level bullet points. All right, so on the middle of the page, you're going to see this. It's going to say, how does it work? So you sign up by connecting your bank account, and we give you a spending limit based on your bank balance with no credit check. So if you're familiar with any of the fintech companies that either I reviewed or you've seen on the internet, you should be familiar with Plaid at this point. So the reason why a lot of these fintech companies, why they're able to extend you either credit limits or spending limits or any products at all without having to check your credit score or having to do a hard inquiry, is because they're able to use services and products like Plaid. And through Plaid, you're basically going to log in to your online bank account as you typically do, and they're going to be able to see things like your average daily balance. They're going to be able to see how much you're depositing into this account, and through the information that they're going to get from Plaid, they're going to be able to easily determine whether or not you qualify for their product. So that's basically what Extra is doing. It's nothing new. A lot of these fintech companies do it. So that's what they're going to do here. So once you go ahead and you start the application, you're going to see the Plaid pop up. You're going to put in your banking information, and based off of that information, that's how Extra is going to be able to determine what the spending limit they're going to give you, right? So that's step number 1. Step number 2, when you swipe your Extra card, we spot you for that purchase and automatically pay ourselves back the next business day. So the example is basically, if I were to go to Target today and I had my Extra debit card, if I were to swipe $100 worth of groceries or whatever at Target, that $100 is not going to come out of my checking account. Extra is actually going to pay upfront for me first, and then the next day, one business day after I swiped at Target, they're going to take that $100 from my checking account, and then they're going to cover the cost that I made previously. And that's how it works. And as you can see on step 3, every time that I do that, they're going to keep tally of that, and they're going to send that information, that payment history, over to the credit bureau. So that is essentially how Extra works. The concept sounds good on paper. There are a lot of good things that these fintech companies are able to do. They're able to be a lot more creative than your traditional banks. But there are some things that I'm not a fan of, and I want to go over that right here. So when we scroll down a little bit further, you're going to see this little emoji image of, the benefits of having good credit and bad credit, things that at this point we should be aware of. But at the bottom, or towards the bottom, you're going to see that Extra is going to do this versus. They're going to compare their card over to a standard secured card, a debit card, a credit card, and then you're going to see that they're going to try to basically position themselves as a superior alternative compared to your secured, your debit, and your credit cards. This section I'm not really a fan of because I don't find it to be very accurate. So for example, the secured card, when you compare it to Extra, Extra is saying that they have full credit impact, and they're saying that a secured card doesn't. Whether or not it's a secured card or it's an unsecured card, that utilization, that payment history is all still going to be reported to the credit bureaus, and that's actually what's going to create your credit score. So the fact that it's a secured card, there is no knock against that. And especially on this channel, the secured cards that I recommend are the cards that after about 6 to 8 months, and even sometimes up to a year, those cards tend to graduate, meaning you're able to go from a secured card to a better card over time. And then normally once you graduate, you get your security deposit back, you're able to qualify for better credit card products. So I don't really get this limited credit impact that they're trying to sell here. Requires a security deposit. So with a traditional secured card, that is true. A lot of them, you're going to have to put down $250, $300, $500 as a security deposit in order to get the credit card. And again, over time, 6 months, 8 months, 12 months, after you pay on time, they're going to give you that security deposit back. With Extra, you do not need to have a security deposit. You do not need to come out of pocket $200, $300, $400. They're not going to require a security deposit. However, with Extra, and we're going to get to that in a second, they are going to charge you monthly to use their service, to use their product. And there's actually 2 tiers, but we're going to go over that in a second. So back on the secured card side, saying up to 17% in interest rate, and that is true. A lot of the secured cards, especially when you're in the credit building stage, you're going to have higher interest rates. But as I've mentioned on this channel a lot, you only pay interest when you carry a balance. So if you went ahead and you got a Discover It card and you put down $300 and you pay your balance off every single month, you're not paying any interest. That card is essentially for free. That's a concept that I don't think people understand. You only pay interest when you carry a balance. So even though Extra is saying that they don't charge any interest, that's technically true. However, they're still charging a monthly fee regardless of what you spend for that month. With the secured card, especially with the mindset of trying to build your credit, all you need to do is get any secured card, do a small charge, put Netflix on there, put Hulu on there, and then pay that off completely. Or as I teach in my course and in a lot of my videos, it's actually good to leave a few dollars at the end of that statement date. That way your credit card is going to be able to report some sort of balance to the credit bureaus, and that's going to help your utilization rate. But that's something completely different. We're going to stick with what Extra is talking about right here. Number 4, hard credit checks. That is true. The majority of any credit union, any bank, if you're getting any sort of credit card or secured card, most of the time they're going to get a hard inquiry. They're going to pull a hard inquiry on your credit report, and it's slightly going to ding your credit file, but again, over time, that's not really going to matter. And again, the credit cards that I typically recommend, after about 6 to 8 months, those cards tend to graduate. Those cards tend to evolve, so to speak, into products that you're really going to be using for years down the line. With Extra, the question is, and I say this with any sort of credit building product, if you're going to put it on your credit profile, can you see yourself using this product 6 months, 12 months, 2 years down the line? Once your credit score is in the low 6s, really, you can begin to start applying for other products. So even though they're not doing a hard inquiry for this product, the question is, can you see yourself using this product 1, 2, 3, 4 years down the line? If not, that's something to keep in mind. And then if we go further down, you're going to see the FAQs. I'm not going to go over all the FAQs, but just a couple of things that I want to read. How much does Extra cost? Most credit building products make money from steep interest rates, hidden fees, and by selling your personal data, especially the free cards. At Extra, we don't think that's right. That's why we charge a flat monthly subscription instead, with our lowest plan starting at $7 a month. And I believe that $7 a month is factored in when you pay the whole year up front. If you pay month to month, I believe the cheapest plan is $8 a month, and their second tier is the $12 a month plan. The next thing I want us to pay attention to is this following question: which credit bureaus does Extra report to and how often? Currently, we report to both Equifax and Experian at the end of each month. That's another thing to pay attention to. So as I was doing my homework on this product, once I saw this was almost like another strike against it for me, because if you're going to be paying a monthly fee for a credit building product, I don't care if it's something like like an installment loan, a secured card, regardless of what you're using, I want to make sure that this product is actually going to be reported to all 3 of the credit bureaus, Experian, Equifax, and TransUnion. With the Extra Debit Card, TransUnion is not going to be factored in, so you're not going to be getting the positive payment history. You're not going to be getting the credit building boost on your TransUnion credit profile. It's only going to be on Equifax and Experian. And again, if you're paying a monthly fee, this is something that you would like to see in a product that you're investing in. And then the last question I wanted to go over was, how does Extra report my credit utilization? Extra automatically pays itself off daily, so your credit utilization resets every 24 hours. Picture a credit card that pays itself off without any of the interest. Thanks to this unique feature, you never have to worry about staying below the recommended 30% threshold to maintain a good credit score. So once again, that sounds good on paper, but remember, this is why on my channel I tend to go over the fundamentals a lot when it comes to your credit report, when it comes to building a solid credit profile. Your credit utilization is very important. This is the reason why I'm not really a fan of products that pay everything off for you every single month. You want to have your credit cards reporting some sort of utilization every single month on the credit bureaus. Why? If I'm on the Experian site right now, you can see this chart I always use. You have your amounts owed, you have your payment history, you have your new credit history, your credit mix. These are all the factors that make up your credit score. And as you can see, the second biggest factor that makes up your credit score is your utilization. Your utilization. This is the reason why I say when you're spending and you're swiping your credit card, you always want to leave a little bit of something. I don't care if it's $5 at the end of that statement date. Leave a few dollars just so that you're able to show a little bit of utilization being used. You want to show the credit bureaus, you want to show FICO, because FICO loves this. They want to see that you're capable of managing your finances correctly. They want to see that you have a $5,000 credit card, but you're only using a small portion, that you're not living off your credit cards. So utilization is not my opinion. We're literally on Experian's website. The second biggest factor, aside from just paying your bills on time, is your utilization and keeping it low. Not keeping it zero, but you want to keep it low. So when companies like Extra say you don't have to worry about it because they pay everything off, that's not really like a good thing. Most people think it's a good thing because when you pay everything off to zero, you're not paying any interest. That's true, but again, specifically for credit building purposes, you want to show a small balance being reported to all three of the credit bureaus, even if it's just a few dollars. And I don't believe the way Extra is set up, you're going to get that benefit. All right, so now let's jump over to the pros, because there are some good things about this card. The first, the barrier of entry. So if you're 18 years old or older, if you have a social security number or an ITIN number, if your bank account is located in the US or Canada, and you are a US resident, you can basically qualify for this product. So number two, you're going to be able to build credit with this product, but as I just mentioned before, it's only going to be Equifax and Experian. However, if you're somebody that is starting from scratch, if you don't have anything being reported, something is better than nothing. So I will give them that. Number three, no credit check. So there's not going to be any hard inquiry. And the reason why they're able to do that is because of the software and the platform Plaid. And then lastly, virtual card. You are going to be able to have a virtual card with this product. And this is something that I do like. I always mention credit card fraud is at an all-time high. Even before you get your physical card in hand, you're going to be able to make your purchases with a virtual credit card. And to me, that is a lot safer. So those are things that I do like about this product. Let's check out the cons. The first one is the monthly fee, as I mentioned that before. So what do you get for those $8? The $8 is their credit building plan. So the $8 plan is basically their entry plan. What you're going to get out of this is the ability for Extra to report your payment history over to the two credit bureaus. If you do opt for their higher plan, which is $12 a month, you're going to be able to qualify to earn rewards on your day-to-day purchases. Once you research the website, you're going to be able to see that you can get up to 1% on every dollar spent, and that's if you do the $12 plan. If you pay annually instead of month to month, you do get a slight discount. I believe that is a 25% discount. The cons, I already mentioned this several times. Limited reporting, TransUnion is missing. Number three, limited rewards. So $1 spent is redeemed for up to 1 cent in their shop. It's not something that you can go to, let's say, Amazon or Best Buy. You're not going to be able to use your points at other retailers. You're only going to be able to redeem it for up to 1% in their shop. So basically all the items that they have there, that's basically the only thing that you're going to be able to redeem your points for. And then lastly, you're not going to have ATM access. So if you're somebody that is wanting to basically take your bank issue debit card and just keep it in a sock drawer, you may not be able to do that. You're likely going to have to keep both items on you. If you're out and you need to get some cash for valet or for whatever the reason, you're not going to be able to use your Extra card, go to the ATM, take out money. You're going to have to keep that old school debit card on you if you want to go to the ATM. All right, so that is pretty much it. I went over the cost, I went over the rewards points, I went over how they report and who they report to. The question is, would I recommend this as a credit building product for somebody that is looking to build their credit at this point in time? And my answer will likely be no, not because this is a necessarily bad product. If you've seen on my channel, I have actually 2 or 3 videos on the shopping cart trick. With the shopping cart trick, you're able to trigger the pre-approvals for some store cards. And through the process, I show you guys how to get these store cards with no hard inquiry. You're able to have a fixed credit limit, and that's going to help you with your credit utilization. You're going to be able to use your card at larger retailers. You're not going to get a hard inquiry. I think I mentioned that before. And then lastly, you're not going to pay an annual fee when you go and do the shopping cart trick. You're going to just be able to have the card, use it as needed, pay it off, and then you're good. You're not going to be charged $8 or $12. And also they're going to be able to report to all 3 of the credit bureaus. So, but there are other options out there that are free, that is able to help you build payment history, help you build a decent credit profile in your credit journey. Again, paying a monthly fee for a product that does not report to all 3 of the credit bureaus, that's not something that really excites me. So I do like seeing products like this. Hopefully in the future they can further improve upon this. Hopefully other companies, other fintech companies are going to be able to come out and be even more creative in the future. So that's good for us as the consumer. So, but that's pretty much it. Hopefully you got a couple of gems from this video. Hopefully you've understood a little bit more about what Extra does. Let me know if you have this card. Let me know in the comments if you enjoy the rewards points, some of the products that you find in their store. Let me know if you've seen some credit increases. Just give me your feedback. And aside from that, I'm going to catch you guys in the next video. Peace.